Hello, my name is Glenn Goodrich, and I'm here with my father, Jim Goodrich. And this is our first episode of a podcast that we are recording. And the topic that we're going to cover in general with this podcast is market trends, tying in property tax, and information just involving real estate in general, kind of in the markets of North Texas and Harris County. And today is kind of an interesting day to record this because how would you what does your gut tell you in the North Texas market? How do you feel about that? Like, what's going on?
Have you ever ridden on a roller coaster?
Yes.
And
I don't like them, but I have. Yeah.
It's like riding a roller coaster with your eyes closed. You don't know what's coming next.
Mm-hmm. Yeah, because I get a sense that people just kind of don't know what's going on because we know for sure that we were in a declining market after interest rates were hiked. I think everyone kind of knows from the headlines and that the market peaked around May of 22.
Yeah.
And we know that we've been declining since then, but we've recently seen some activity that's a little confusing with what's going on with values and just activity in general. And so we're going to dig into that a little bit today.
Okay.
Let's start off with the more traditional statistics that people are used to looking at, like median days on market, sales volume, and just days on market, just because I think it provides an interesting context of where we were and kind of a little bit of where we are now. But I think what we want to do is get quickly into a new statistic that people don't really use a lot called the Hotness Factor.
Okay.
And we'll get into that, discuss more about what that is. So you can see from median sale price, this is just tracking Collin County, Dallas, Denton, Rockwall, and Tarrant County in the North Texas area. What sticks out to you when you look at this graph?
Well, I was going to ask you, I think I just saw that the top line there is Collin, the blue line,
Right.
And it really separated itself in the peak, which would have been probably
Right.
the second quarter of 2022, really separated itself from the rest of the pack, much more so.
Right.
And, as opposed to if you go over to the left, go back to, when does it start? 2021? Yeah, Collin was always at the top, but you see that all 4 or 5 counties there are pretty closely clustered.
Right.
Until you really start taking off. And now there's pretty good separation. We still see, let's see, the bottom two are what, Dallas and...
That's Dallas and Tarrant.
And Tarrant, okay, so they're still tracking pretty close. But pretty good separation with Collin and then even with Denton.
What I noticed was look at how close Collin and Denton were back in 2018.
Right.
And now look at where they are now.
Right. And even more so, compare Collin with Dallas back in the very beginning.
Right.
And then compare them now. I mean, there's a huge, they still are pretty widely separated. But when it peaked, Collin really took off, and they've all fallen. I mean, that's a standard pattern that we've seen that peak around Mother's Day, and every county has seen. You want to call it a decline or a price correction. I think probably a price correction is probably a better way to describe it, because you mentioned hotness factor. When we get into that, I think we're going to see some pretty strong evidence that this is temporary. It's not going to go on.
What's a little funny about this is we actually recorded this podcast once before and we had an error in it. So I scratched it and now we're re-recording it. And I'm kind of glad that we are, because in the original recording, we did not have any February information. Mm-hmm. And we only had median sale prices through January 31st. And we were speculating at this point, this is the data that we had in the original recording. And we were like, oh, Collin might be upticking with it. But we were sure to qualify that with, you can't really just hang your hat on monthly median movement because there's ups and downs. And now we're seeing again a down, and we're recording this February 23rd February 23rd. So almost all the way through February, and we're seeing a downtick in Collin median sale prices in February. Again, I mean, don't hang your hat on one stat. It could go back up again in March. We just don't know. But that's an example of why you don't hang your hat on month-to-month median information.
No, because when the median moves, but does it move because of the market going up and down, appreciation or depreciation, or is it moving for other reasons? And sometimes it moves because the composition of the sample is changing. You could have in this little month there where you saw Colin take that uptick. That was January, right, where it spiked up?
Yeah, that was January of 23.
Well, it could be that some of the sales that maybe were supposed to happen in December got pushed back to January, and maybe they were some of the higher end sales, and so that caused that median to go up. And it could be a change in the buyers' preferences. Maybe they're buying bigger houses one month and then they go back. So you really can't look at month over month changes in the median, in my view.
Right,
hang your hat on it.
And that's another reason why we're trying to get to hotness factor as soon as possible. But there's just some of these stats are a little interesting, so let's cover them real quick.
Okay.
Sales volume, no surprise, like the number of transactions is declining. Although you would notice that on this chart that there's a pattern, and we're just simply kind of following the pattern, except maybe a little bit more exaggerated, but not anything that's just like, unheard of. I mean, you're kind of getting back to levels of transaction volume that were closer to what you were seeing at this time of year in 2018.
Yeah.
So I don't think there's anything, extremely alarming about that.
And keep in mind, we're down right now at the end of all those lines. But keep in mind, this is February.
Right.
It's always down.
You can see that's why we look at historic data, and you can see that in context that, yes, it may be a little bit more exaggerated because I think it's anecdotal, but people probably don't want to trade their 3% mortgage for a 7% mortgage right now. So they're not really selling the house. Days on market, that's interesting, and this is actually a stat that I messed up on in our first recording. I had confused this orange line Dallas with Colin, and we spent a lot of time talking about how Colin days on market are just so much different, but it's actually Dallas days on market that's way lower than everywhere else, and I think that's an interesting stat, and we kind of had an off-camera conversation about that we will tie into the hotness factor. So without further ado, let's get into the hotness factor.
Okay.
So what is the hotness factor? Because people probably don't know what that is.
Well, the hotness factor is simply a ratio of the houses under contract to the total inventory. So it's the number of houses that are already gone in escrow, let's say, at the title company, compared to the total market. So if you went driving around the neighborhood and if all the realtors had a sale pending sign when a property went pending, and you looked at those and looked at the others that were not pending, that would give you an idea of how hot a neighborhood is.
So if there's 100 houses for sale in a neighborhood and 60 of them have a pending sign on it, that's 60% of the listings are pending.
That's right.
And that would mean a 60 hotness factor.
Right.
Okay. And so what we're seeing here is we've broken it down by county, because why we break it down by county is a lot of the statistics that you're used to seeing are at the regional and level. So like DFW, like if you track like CoreLogic or Case-Shiller information, it's all at the regional level, which is great when you're comparing the Dallas area to Houston or to San Francisco, for instance, or to Miami.
Right.
But it's really not particularly useful for people working within the market, because there's multiple markets within the DFW market. I mean, you can see the distinguishing, just look at Rockwall versus Collin in this hotness factor. You see Collin is at about 50, and then you've got Denton behind that at rounded up to 47. So Denton and Collin tracking pretty close together. Tarrant's at 40, 46. And then you've got Dallas at 43. And then you've got Rockwall at 33. That was one of the things that had me confused about Dallas, was you've got a hotness factor of 43, but then you've got that days on market at 30. And that was one of the things that confused me was, why is it not hotter if it's got lower days on market? And I don't really think we had a particular answer for that. It's just one of those things that if we're geeking out on the stats, we found that a little interesting.
Yeah.
And then but now, even within Collin County, there's multiple markets within Collin County, whether it be city or price points.
Mm-hmm.
And so one of the useful thing to do is also break down the hotness factor by quantile. So for those that don't know what quantiles are, it's where you divide a population into 4 groupings, the bottom 25%. So as an example, those might be properties that are like 300,000 and lower or 400,000 and lower, since prices have just gone up. And then you've got the 25 to 50%. So the median would be the 50%. So 25 to 50 is kind of the middle, but in the lower end of the middle. It's kind of like lower middle class, if you will.
Mm-hmm.
And then you've got upper middle class, the top 50 to 75%. And then you've got the high end, the top 75%.
Mm-hmm.
And so when you see this, what are you looking at here?
Well, as you go from top to bottom, you're going from more expensive houses to less expensive houses. You can see that all the bars move to the right. They get hotter, in other words.
Right.
So the bottom quartile,
right,
yeah, is going to be hotter than the top quartile, and that's, I think, every realtor that's been at this for a few years has experienced that.
But here's what I found interesting and why breaking it down is useful. Look at Denton County in the lower end, like in what is that, like 65-ish, 61, okay, is what it says. And then, but you look at the hotness factor by county, and Collin is hotter than Denton in general.
Mm-hmm.
And so there's something going on in Denton County in the lower end that's pulling it up substantially more than anywhere else.
Mm-hmm.
So what I did was I went ahead and broke those down by city. So this is the bottom 25% broken down by city.
Okay.
And you see Little Elm just is sticking out like crazy there at like a hotness factor of 74. So in other words, 74% of the homes that are listed there are under contract right now. I mean, how hot is that?
Well, that's very hot. Of course, it's in that 380 corridor, with the tollway running all the way up to Salina now. That area is totally opened up in the last few years, and you have that price point that's just hot as can be.
Yeah, I tracked that a little bit. So like if you hover over this, you can actually see that the value range to get into the bottom 25%. In other words, if it's under 350,000, that'll get you in the top, in the bottom 25% there. Whereas in McKinney, for instance, that's 400,000.
Right.
So there's just higher price points in general in McKinney versus Little Elm, and I think with interest rates up and just prices up in general, any kind of product that is going to be priced lower is going to perform really well, and you're obviously seeing that in the data there.
Right.
I think it's worth looking at the middle 50%. So it's the 25 to 50% that represents the lower middle class and the upper middle class, if you will, price points and how those are doing. And you can just see that that's dominated by Allen, McKinney, Plano, and Anna. So those are all in Collin County.
Mm-hmm.
And then you're getting, and one Wiley is also in Collin County. And then you're getting Denton. So what's interesting is I don't see Frisco on here, but that's in the middle. Oh, it's down here. Which, I mean, well, it's 55, which is, I mean, that's really hot, right? That's pretty hot.
Yeah.
So, I mean, there's just a lot of hot markets right now when you're looking at the cities. Like, you still have Little Elm in that middle, the 350 to 406, that's still pretty hot, ranking above there. So Frisco is still hot, even though it's lower on this list relative. I mean, 55%. I think what's going to be interesting to look at to put that into more perspective is this historic hotness factor.
Mm-hmm.
So this is over the past 5 years what we've been looking at, and you can see it kind of. You see the lower hotness factors in 2019.
Yeah.
And you're seeing kind of like that's this blue line let's just track, because Collin County is in the lead right now. So let's just track Collin County historically. Right now it's about 50%. I had to cut this off. So to track our historic hotness factor, I kind of have to do some funny math with historic data. And there's about a couple of months of lag between the historic data and the current. So this is only tracked until November of 22, the historic. What we've been looking at before is current, like with the current hotness factor, but this is a historic look. So it's gone up a little bit since November, obviously. It's gone from 46 up to 50. But historically, Collin hit 23 and was bumping in around the 30 to 35 range for a good amount of time in 2018 and in 2020. And then you can just see where it started shooting up.
So it was 25 to 35% for about 2 years straight there, from 2018 to 2020 before it took off.
And look at when it took off, like right when COVID hit in April of 20.
Right.
And that's funny. I remember looking back and thinking that was going to be a death sentence for the real estate market. And I mean, that's what everyone was thinking. And
nobody got that right, did they?
No. I mean, look at that. This is the exact opposite. Yeah. I mean, it went crazy after that. I mean, all the other counties did, but that's when you see especially Collin just taking off. And then the hottest markets were in Denton at points. It peaked at 76.
Yeah.
So, what are you seeing in the market when you see a hotness factor at 76? Like, what are some characteristics that follow that?
Well, if your hotness factor is at 76%, and let's just review what that is again, it's the ratio of the houses that are pending to the total amount of inventory. So if you're a real estate agent and you want to calculate that hotness factor, which you should be doing every time you list a house or work with a buyer, and this literally takes you 30 seconds to do. To get the number of pendings in your area, you would put in your city or your zip code and your price range that you want. And maybe you just leave the price range wide open. Maybe you want the hotness factor in Richardson, let's say. So you put in Richardson for the city, and you would check for the status. You would check all the pendings, the active option, AC, that sort of thing. And you don't have to look at them, just get the count. And let's say that count is 50. And then if you want to know the total amount of inventory, you've already got the pendings right there. So just on your terminal, just go over there and check active, and now you'll have everything. And after you check active, if that totals up to be 100, then you know that 50 out of 100 are pending. That's a hotness factor of 50%. So normal hotness factor, and when I say normal, I'm not talking about the last couple of years. I'm talking about the last 20 years. It rarely gets above 40%, and it rarely gets below 15, 20%. So it stays in that range in normal markets. And of course, 2021 and 2022, we should never compare any real estate market with 21 and 22, period. It's just such a rare anomaly. But that hotness factor typically, it gets to be a buyer's market when that hotness factor gets down to 20% or even a little bit below 20%.
So we were kind of getting close to a buyer's market in 2019.
Yeah.
Right. Well, just in Collin, I mean, you look at...
And 20 is not bad. It's still normal, but it's the low end of normal. And what month is that?
Well, what I'm basically seeing is in the past 5 years, we really haven't had a buyer's market.
No.
and look at where we are today. We're nowhere close to a buyer's market today.
Right.
And then you look at where we were, and I mean, relative to where we were, yes, of course, it's much lower. But this is where you're getting like 1 day on market, 15 offers, that kind of thing. At 76 hotness factor.
I mean, you've gone like from triple white hot in a blast furnace,
right,
to now it's red hot. Maybe not red hot, but it's hot.
Yeah. And so I see on Twitter from some people that I follow that are in the area, Dallas area, they talk about multiple offers. And they're kind of saying that they're getting some kind of boots on the ground information that bucks the narrative. And I think when they say buck the narrative, I mean data that's being reported in the newspapers. Because again, the newspapers again, like they're taking information that is looking at those traditional statistics that we were looking at to start, like median sale prices, things like that. And if you're looking at the data that way, it looks like, okay, we've been in a declining market. But if you're looking at the data from a hotness factor perspective, which is a real-time snapshot of the market, it looks like you're seeing some activity that supports, yeah, I mean, hotness factors in the 40s and 50s. It's not crazy to see multiple offers in that situation.
Yeah. And this is why I said a minute ago when you had the chart up about the median sales price. Can we look at that again real quick?
Sure.
You see that drifting down since in all counties with nobody really stabilizing yet. What's the green one there? Tarrant. Looks like Tarrant's trying to.
Rockwall's kind of interesting.
Rockwall's trying to. That's what I meant to say.
Rockwall's dipped down, and now it's kind of coming up and stabilizing a little bit.
So none of them have really hit a stabilization point yet, it looks like. And so you might be saying, good gosh, is this downward trend really going to continue? And so let's go back to the hotness factor again, and let's look at where we are right now.
Okay, the historic.
Yeah, the historic, and we're in that, well, you already said it, 40 to 50% most of the time. So what did I say earlier? It rarely gets above 40%. It's at 40 to 50% right now. That's a hot market.
Right.
And you're going to get multiple offers. So you can't have declining prices for much longer, I don't think, with this kind of hotness factor. You just can't. What we've done now is, if you want to think about it like you go to a bar and the bartender pours a beer and you got a lot of foam on top of it. If you wanted to buy that beer back in second quarter 2022, you had to pay for the beer and you had to also buy the foam at full price.
Right.
Now, you just buy the beer.
So here's one thing I thought that was interesting was when we recorded this originally, we did not have any February median sales information. And we still don't have all of February because, again, it's February 23rd, but we're pretty close to the end of the month. In Dallas, we were just, one of the things that we were hypothesizing, is that a word? I don't know. Mm-hmm. On the phone, when we were looking at the hotness factor and days on market on Dallas, I mean, just look at the days on market and then look at everywhere else has days on market like kind of at 50 about. Mm-hmm. And Dallas is sitting down here at around 30. And then you look at median sale prices, and these are trying to hold a little bit, up and down, hold. But you saw before we had this little tick up in our previous recording, we just saw Dallas going down. Mm-hmm. And one of the things that I had said was, I feel like they should raise prices in Dallas, because if you have days on market on 30 and everyone else is tolerating days on market at 50, maybe you should test higher prices and see what happens. And you might be seeing that happening in Dallas. I don't know. Again, I'm kind of falling fallacy to what I'm telling everyone not to do, which is look at 1 month. Yeah. But that could explain one reason why you've got low days on market in Dallas is that people are not pricing aggressively, or realtors aren't pricing as aggressively as maybe they could. And so I'm hoping that maybe if you're in Dallas and you're a realtor and you see this, maybe you and you guys would know better. The local realtors would know better than me looking from high above at some data. And also Dallas is a very big market to describe. I mean, there's East Dallas, North Dallas, Lake Highlands, like those kinds of markets within that market. But this might give you some confidence to push the price a little bit in Dallas. Mm-hmm. I also wanted to look at this chart and kind of frame it in a property tax perspective, because one of the things that I'm looking at is, are doing time adjustments to sales that are used, and you see from the sales volume chart that a lot of the sales occurred during this time of the year, which happens to be in the middle of 2022, and there's not a whole lot of sample to work with down here. Well, look at the prices at the middle of the year, way high, way high, and then look at the prices at the end of the year. So you're going to have more samples of higher selling properties than you are of lower selling properties. And I know that almost all the appraisal districts that we work in don't do time adjustments. And that's actually going to be an adjustment that we do this year So I'm going to be taking sales from here, and I'm going to be adjusting them down, 10 or 15% depending on which county it's in, or even which market within the Collin County market it's in. So I might do a McKinney sale and adjust it at 12%, and I might do a Prosper sale and adjust it at 15%.
Could be.
Yeah. But I also thought it was interesting, too, to look at this chart because you look at where are we at. I'm looking for a January of 22. Okay. There's January of 22 price. There's January of 23 price. But see how it's that one little tick up and then it goes up? So what I'm looking at is the appraisal district. Let me see if I can do this using this program. Okay. I'm looking at is the appraisal district going to compare January to January? Because if they do January to January, I did the math off camera to make this easy. That looks like an 8% increase in value year over year. But if you bracket that between the month before and the month after, and you say instead of being at 218, let's say we're at 495. That ends up being a 4% increase in value over time. So that's another reason why you can't just isolate 1 month. But if the appraisal districts do that, which they could, because that's very easy, just compare January to January, and you got 8% increase in value. But put it in context with what's around it, and maybe look at a 2-month rolling average or something, and it drops to a 4% instead of an 8% increase year over year.
But you would know better than anybody when you get into the protest period, you're not going to look at January sales from a year ago. You're going to look at the most current data you can. And in all fairness, I think the appraisal district's going to try to do that. They're going to look at the fourth quarter and see if they can find sales. If they can't, they'll go to the third quarter.
Right.
And there may be some cases where they have to dip back into the second quarter. And if they're using those second quarter and third quarter sales, your point is well taken. They need to be adjusted down. Even the fourth quarter sales, if it's early fourth quarter, warrants some downward adjustment because none of these areas look like they've leveled out by January 1.
Yeah, I only brought up the January of 22 because I saw an article in the paper where Jeff Law, the chief appraiser at Tarrant County, said that they've seen price increases of 10 to 15% year over year. And just to isolate Tarrant, I mean, here's February. I mean, here's January of 22, right there, and then there's January of 23 right there.
Right.
I mean, that looks about even to me. So if you're looking at data from here, I can see where you're getting a 10% increase. But if you're looking at year over year, because the data valuation in property tax is January 1st, and in this case, January 1st of 2023, I'm seeing flat values there. And then, there's no spike up and down in Tarrant like you saw in Collin up there. So I feel pretty confident that we're pretty much back to where we started from January 1st of 2022.
Yeah.
And Tarrant, I mean, just looking at Tarrant in general as a big market.
Well, we'll see what Tarrant does. And, we don't know for sure where Jeff was coming from. I'm sure he's got some data to back that up. And it may be something other than median sales price changing. But I think his comment was that you can expect
a 10 or 15% increase in your value.
So could they have been low a year ago?
Yeah, I think that's where we'll dig into this more in our next video to show kind of some forecasting of what we think is going to happen with values. And I think what happened was that Tarrant might have just been low on some of their values last year, and they're kind of making up a little bit of ground. But I have a data science project that we did to compare sale prices in the third and fourth quarter of 2022 and compare them to what they were on the tax rolls for. And I think that's kind of where we're getting, where he's getting that number from.
So that could be a predictor of who's likely to see a big jump in their property taxes if you look at that data.
Right.
Okay. And
that's what we're going to cover in our next video. Real quick, kind of not out of the data realm, there's a lot going on with the Texas legislature. And this is kind of an off-the-cuff conversation, so we haven't prepared for this. there's a number of items that are being discussed. Number one, they're talking about increasing the homestead exemption for ISDs for the school district from 40%. I mean, from 40,000 up to 70,000. Mm-hmm. That seems pretty popular and really going to probably sail right through. There's some other stuff that gets a little bit more controversial, like lowering caps from 10% down to 5%. Homestead. Mm-hmm. When I say caps, I mean the cap on your
homestead cap.
Your homestead cap.
Okay.
From 10 to 5%, and that sounds really good on its face, but I mean, have you really thought about that? The consequences of what were to happen if they were to do that? I mean, because in politics, there's a famous quote: "There's really no good solutions. There's just trade-offs." What's the trade-off of going from 10 to 5%?
Well, the school districts and the cities and the county, they're going to get their money. They're going to get what they need to run the schools, to run the cities, and run the counties. It's just a question of how big is your piece of the pie going to be? And so if you start changing homestead exemptions and caps, homestead caps for the people that live in a house and own the house, and let's just don't mince words, those are the voters. Mm-hmm. Then if you lower their share of the pie, somebody else has got to pay a higher price. So that's the commercial properties, the business personal property. Don't have too much mineral rights here, but Tarrant County has quite a bit.
Landlords,
yeah, apartments. So somebody else has got to pay a bigger piece because, like I said, you know, the school districts and the cities and the counties, they're going to get their share. They're going to get what they need to run their city and run their school, and of course they should. It's just a question of who's going to fund it. How big is your slice of the pie?
Here's another angle to look at it, and I don't know if I'm right or wrong about this, but I'm looking at California when they would freeze your value basically at what you paid for it.
Prop 13.
Mm-hmm. And as you lower this appraisal cap, you get closer and closer. Now we're not at 0% increase, but now you go from 10 to 5%, and you're edging it closer. And one of the things that we're witnessing right now in the market is a disincentive to sell your home because of interest rates. Like we said it earlier,
right.
You know, people don't want to trade a 3% mortgage for a 7% mortgage. I just wonder what the ramifications of, do you want to trade a property that has a market value at $600,000, but your appraisal cap is keeping you at $400,000, and the more you exaggerate that, the more there's less incentive to move. The more you're protected with the cap, and so I don't know. I think the realtor lobby, for that very reason, doesn't really like the caps. But you discussed also an incentive of shifting the burden from property owners even more so to commercial property owners, which kind of goes against the grain of what made Texas really attractive, was being a business-friendly state. And it's also, you're not really focusing on the tax rates that are more controllable by elected officials.
Right.
And there's already kind of some legislation in place that tackles that. So, like I said, it's just I'm not arguing one way or the other for it, but it's one of those things that sounds so good on its face. Oh, decrease the homestead cap from 10 to 5%, but there's trade-offs that I think people don't really know about or consider, and it's right. Number one is, what's it going to do to the real estate market? Disincentive to sell, and also when somebody buys a home, there's all these other multiplier effects that go on with that, like furniture and things like right. that. So just something to kind of think about with this legislative session going on and the trade-offs that are going to be involved. There's several other things that I'm sure we'll get into in later videos. But is there anything else that you wanted to discuss before we wrap up?
No, other than I think you set the stage right. We're in a roller coaster, and if you want to ride in the front seat of the roller coaster, I think the most important thing we talked about today was the hotness factor.
Right.
And I'm sure we'll talk more about that in later videos, because it's not something that people get just right off the top, because you don't see that anywhere.
Well, and it's constantly changing, and then we're looking at trends, and we're looking at isolated data points right now, but really a collection of data points over time is what makes a trend. And so it'd be interesting because right now it's just the market is a big question mark. I think we don't know if we're flat, going up, going down, and so the hotness factor gives us a good guide to navigate this kind of unknown of where we are currently.
Right.
All right, well, that's going to do it for today. Thanks, everybody, for tuning in, and we'll see you on the next video.